Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A bullish engulfing pattern yesterday, which wasn't that hard to do as the previous session was an indecisive spinning top. However, though the action was of a reasonable size, the true range, that is between the low and high, the opening, the opening and the closing, low and high there, well, that was quite limited. Additionally, it was worth noting where the actual range was. You see, it was perfectly encapsulated by the previously highlighted 71.25 to 72.29 congestion zone, comprising the 2020 high at 71.75, the September 23 high at 71.99, and the December 23 low at 72.29. Further up, we have congestion between the May 2019 high at 73.38 and the 50% absolute Fibonacci line at 73.73. Whilst below, we have support at the May 23 low at 71.29 and the March 23 low at 70.13, as well as the newly drawn bright red neckline, currently 71.23, of the proposed, unusual though possible, early September to date head and shoulders pattern. This pattern, I know, is pushing the technical analysis envelope quite hard, as it just happens to be in the wrong place. And I know some might discount it or even ignore it completely, but as I said yesterday, I felt obliged to at least mention it. It would seem to me that yesterday was an early attempt to try and trigger this head and shoulders pattern, but it failed, with prices closing well up and off the bright red neckline. I do not believe that this will be the only attempt at breaking the neckline. Not yet. So far today, we're edging up over the 71.75 to 72.29 congestion zone, well, just about, and very cautiously, but coming back down within it again and looking like an indecisive doji cross right now. Spot gold. A bearish closing black Mariposa and fourth bearish black crow yesterday, and a first close below and outside the bright red lower tine, currently at 25.92 of the broken but seemingly repaired, only to be broken again, late June to mid-July bullish shift pitchfork. Below is the dark blue upper trend line, currently at 25.50 of the big April to September broadening top pattern, as well as the nearby rising mauve medium moving average, currently 25.45, plus the August 23 high at 25.32. Now, previously I had said that there had been an argument to regard this April to September broadening top pattern, a pattern I've been going on about for months now, as the potential hesitation enlarged in a February to date bullish halfway hesitation for possible target X in the 28.35 area in fresh ground above the market. However, this is looking less likely and less likely as time goes by, and especially as we have dropped below the bright red lower tine and towards the dark blue upper trend line of the old broadening top pattern. Instead, this brings into focus the possibility that the action as far back as August to date may be becoming a possible bump and run reversal top. Now, I'll just leave that thought with you for now. And so far today, a further fall, testing down to the combination of the dark blue upper trend line and a mauve medium moving average.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.